Similar to you, I like to spend some time looking at different assets, trading strategies, and ways to invest to outpace market returns. And by a lot, I'm not talking about like 1 to 2% gains, I mean a lot of percentage. And in my studies, I found a strategy that has returned about 2,500% in a little over a decade with only a 20% drawdown. I'm going to show you this strategy that would have turned 100 grand into about $2.5 million in about a decade. That's about a 25x, guys. Compare that to your typical stock market returns, which will have grown your money into less than 300 grand in the same time period. Is this strategy a little unhinged? Yes, but for the aggressive investors like myself, maybe this is something you should consider for yourself. Now, this is definitely not financial advice. I am not a financial advisor.
Knowledge.
Now, to start off our trading strategy, let's look at typical market tendencies. We know the stock market goes up over time. That's why we invest in it. Look at this, just keeps going up. Why would I bet against something that has proved to always come back over the past 100 years? I'd be losing an edge if I bet on it going down. Sure, we'd capture these, but over the long run, it always moves up. So let's have a long only strategy so we're not shorting. Don't be the big short. That's probably not for you. Now, number 2, to get outsized gains, we need a little bit of leverage. If we just invest in this, we're going to get standard returns. But if we get a little bit of leverage, we can get more. Now, we don't want to worry about margin calls or anything like that. But thankfully, we have assets like QLD, XPXL. We even have TQQQ, which is triple leverage QQQ. So for every 1% gain or loss, TQQQ should move 3 times that. Same with XPXL or the 2X versions. The strategy I discovered involves using funds like these. And the specific strategy we will look at involves using TQQQ, but you can develop your own trading strategy using a different asset if TQQQ is too scary, which we know because when we look at TQQQ, it's definitely a wild ride with these crazy drawdowns right here of like 80%. So we're going to do long only. We're going to use a leverage asset. And the 3, let's use a simple indicator on something like TQQQ. I have the MACD trend heat map up. It's a dog doo-doo indicator. It's free on TradingView, but I just want to show you how a simple indicator can really transform a trading strategy. We're going to look at a high time frame. I picked 5-day because it misses most of the fake outs and it gets you out and in at okay times on this volatile asset. It's easy to become really anxious during a time period like this. Let's see, that's a 34% drawdown when it just rips higher again, especially on a triple leverage fund. So we want something that won't react as easily. Now, of course, with this MACD indicator, red means down and green means up. Not that hard. If we were to trade, we don't want to enter during the red market because it's going down. We don't want to be buying, and this is a long only strategies. Now, if we buy when green, it gives you some okay entries. You can see here, here in 19, here in 16, here in 12, and there's a little fake out in October 15. So we would have had okay positions entering over the past decade. But what we noticed when the indicator turns red, it's pretty late to the party. You can see COVID, it would have turned red. You would have actually exited this candle right at the bottom. So you would have had a nasty drawdown in just a couple of days, and that would have been about 70% of your portfolio. Even here at the top, if you went to the top, it turned red this candle, so you actually would have exited here. You would have had about a 35% loss in a couple of days, which that's a lot. That's a lot to psychologically handle in a few short weeks. So most likely we're not going to be able to handle these drawdowns, so we can create a strategy that will limit our drawdowns more. So how do we limit these drawdowns? I'm going to show you an insanely simple system that would have 10 extra money over the past decade. And let's say you started this simple strategy in 2014, and I'm picking 2014 because it works best for the strategy. So our strategy is when the indicator turns green on a 5-day time frame, you're going to buy, and you're going to sell when you double your money or when the indicator turns red. That's it. Those are the rules. Buy when the indicator turns green, and then just sell when you double your money or the indicator turns red. Again, I chose this 5-day time frame because historically it misses a lot of fake outs. This fake out here and 15, but overall it does an okay job. So now let's do the math and mark our entries. Okay, so I marked all our times. We're starting on January 1st, and then I marked each time the indicator turned green. That would have signaled a buy. Now I'm doing the candle after the indicator turns green because we're going to wait for market close, because if you don't, the indicator may flip red and green as time moves on. So once we have a confirmed close, indicator turns green, we're going to buy on the next candle. So now again, we're going to buy, and then each time there's a 100% gain, we're going to sell. And let's do it with $100,000. So let's start here. So our first buy on January 2nd, we're going to buy. Target is 100%, which we hit right before the market downturns. Now this is the one where we're going to get faked out. We're going to buy, We're going to shoot for 100%, but it's not going to happen. Our indicator turns red on this candle for about a 21% loss. We re-enter again when it turns green, hoping for a 2x, which we hit pretty soon. And then we notice TQQQ keeps on going up, keeps on ripping. Have our next entry on March 19th. Gonna buy over 100% gain. We barely squeak by right before the COVID crash. We're gonna do it again after COVID recovers in 20. We're gonna open at market open, 100% gain again. TQQ keeps ripping up, falls all the way back down, and then the most recent run, we're gonna log again in April 23. Market open, shoot for 100% gain, which we hit in January. So now that we have all of our entries up, let's do the calculations with $100,000. $100,000, and we doubled our money in 2014, so let's times 2. Now I have $200,000. Now this is our first real loss in this period of October 15. We can see we had a 22% drawdown, so we're going to times 0.78. Again, that's a 22% loss. 1 minus 0.02, you can figure out the math. So now we have $156,000 left. Now we're going to enter again on that green. We're going to times 2 because that's a win right here. We're going to fast forward to March 19, and we entered and we just barely squeaked by with a times 2. Again, we barely missed the COVID crash. That's more luck than anything, but it worked for the strategy. Now we're going to go again to June 20, and we enter after COVID, and we're going to times 2. And now we're at the $1 million mark. We avoid the bear market, and now one more time, we're going to double our money, bringing $100,000 to almost $2,500,000. About a 25x in your money in 10 years. Now, yes, you could say, John, if you bought at the same time in 2014, you would have had an insane gain at a current price. That would have been almost a 40x. But just as the gains quickly come, they can also quickly leave, because we can see 40x at the top, current price. During the COVID, it would have shrunk down to a 6x, a 643% gain. Still great, but your gains can quickly shrink away, which is why doubling, you can lock in your profits really easily using this double mechanism, which limits drawdowns more. If we compare this to SPY in 2014, right about here, you would have had a 230% gain. If we compare that to QQQ, you had almost a 500% gain. So still great gains just for buying and holding. With a simple trading strategy, you actually outperform the market by a ridiculous amount with less drawdown. Now, did a couple trades we get lucky? Yeah, but it worked. Now, if you're like, John, the trading strategy just got lucky, you don't have to use this system, but it's just an idea generator. You can figure out different ways to exit positions. What if once you had a 50% gain, you exited half, and then 100%, you exited the full amount? Or you just slowly DC out and sell yourself on the way out on an uptrend? What if you just kept some, sold most of it, kept some of the bags once the indicator turns red? There's a bunch of ways you could do this, ways you could sell out, but in general, when it turns green on a 5-day time frame, they're generally good positions with a couple fake outs, like right here. And luckily, we got out before COVID. But you can double your money really quickly in short time frames. As we all know, with outsized reward comes outsized risk, as I showed you. TQQQ can drop super fast. This is a highly volatile asset. Any leverage fund is. But the past decade has also been on a tear, and it's probably just most luck, but I think you could create a great strategy. But since these ETFs are tied to the index, there's a higher chance one of these bounces back than just a random penny stock or meme coin or whatever stupid stock you own, which is why I think using these as an underlying fund provides a great advantage, because the stock market moves up over time, and we can't guarantee every stock moves up over time. That's your edge. This is a very simple system that would have outperformed any index over the past decade. No other index would give you about 25x your returns. And I'm sure you could actually make a better system if you spent the time analyzing one. This one literally just came to me in like an hour. It didn't take that long, and I didn't even refine it yet. I just wanted to share it. The important thing is you make rules and backtest and stick to the rules. If you don't stick to any rules, you don't have an edge when the time is right to go in, like when this indicator turns green. So should you do this strategy or something similar? If you can follow simple rules, have a little bit of risk appetite, and accept sometimes the strategy won't work. Except sometimes you might get lucky on a trade, maybe it won't work, and maybe COVID would have crashed right here, and then you would have lost a lot on the red. I think the opportunities, leverage funds, and Bitcoin, which is what I'm personally invested in, they offer something that's too good to pass on, even if it's just a small portion of your portfolio, which can provide outsized returns. As we all know, past results do not guarantee future results. TQQ has been on a rip since inception, and maybe the next decade just provides choppy price action, which we could have seen from right here. No way you'd make any money if the stock market was like in 2015 to 2016. But we need to seek risk when our risk to reward ratio is heavily skewed to reward. Doesn't mean you go all in on Bitcoin right now when things are just pumping super high. I mean, personally, I think the stock market is going to go up with Trump in office. I think that's super bullish. But don't forget, a key portion of the strategy is just being patient. TQQQ and Bitcoin could keep ripping upwards, and they probably will. But you'd be entering in a very aggressive strategy at an inopportune time, in my opinion. Not financial advice. But what if for now, just an idea, you invest normally, build some cash reserves, and when the time is right, deploy one of these strategies. Look at leverage funds, look at BTF, look at Bitcoin, and go after war when the time is right, and these will provide outsized returns. That sounds like a better battle plan to me. Now, systems don't have to be complicated. It's really your ability to follow through when the time is right and use your judgment calls, use the system. If this is too crazy though, I have an awesome 2 ETF portfolio that smokes both QQQ and SPY with less downside risk. And it's not ridiculous as this one. I think it's actually a legitimate portfolio you could use. Check out the video right here. God bless, guys. Peace.